Yes, people, what's happening, guys? Welcome to my new channel, The Value Investor, which is me. My name's Lewis. Today's video is on stamps.com, ticker symbol STMP. If you don't know what stamps.com do, here's a little 30-second promotional video on what they do.
You won't see these folks at the post office. They have businesses to run. They have passions to pursue. How do they avoid trips to the post office? Stamps.com. Mail letters. Ship packages. All the services of the post office right on your computer. Get a 4-week trial including postage and a digital scale. Go to Stamps.com today.
So there we have it. It's basically an internet-based mailing and shipping provider, which is perfect for small businesses, e-commerce shippers and high volume shippers. And it's also perfect for people who just don't like going to the post office. So let's have a look at the financials using Everything Money's stock tool. I have to say this is the best stock tool on the internet at the moment. And if you're wondering how you get the stock tool, you have to go to Everything Money's YouTube channel and sign up for their Patreon. But I'll leave the link in the description, and all the information will be there. So yeah, let's have a little look at the 8 pillars using Everything Money's stock tool. So this is Everything Money's stock tool, and as I said, it's a fantastic tool. We'll be concentrating on the 8 pillars today, but it also provides a retirement calculator, which I'll do a separate video about. This is basically tells you how much you'll have in a specific point in your life or age in your life if you save a specific amount of money. But yeah, as I said, I'll do a specific video on this retirement calculator. This is a great little tool. This section's to download your portfolio into the tool, and this is the stock analyzer, which we'll do at the end of the video. This is basically to tell you if the stock's undervalued and how much it'll be worth in the coming future, the coming years. So we'll start off with the 8 pillars, which is where I always go to when I look at a stock. So we click on the 8 pillars. As I've said in previous videos, the 8 pillars is all about these 8 fundamentals that are very important that a company should have. For example, PE ratio, revenue growth, shares outstanding, cash flow, profit margins, net income, assets versus liabilities, and free cash flow. So all we do is type in the stock that we want to look at today. We want to be looking at Stamps. Let me spell it right. Stamps.com. And this is the stock chart, show you where it is at the moment. As you can see, it's quite undervalued. The price at the moment is just under $200, and the height of this year it's been $309. So it's quite a bit of a discount, but is that discount justified or not? What I do, I go straight to 8 pillars, press the 8 pillars, and it'll just give you an immediate view on how this company is doing. So it tells us here that it's undervalued at the PE ratio, and the price of free cash flow is under 20 as well. So straight away it's showing you it's undervalued. Great profit margin at 25%. The revenue growth is up, which is great. The net income growth is up over the past 5 years. The cash flow is growing, and the assets versus liabilities is a checkpoint as well. The only negative here at the moment is the shares outstanding. And I'll basically show you what the shares outstanding is all about. Basically, you want to see a company buying the shares back, and it's had a history of buying the shares back. As you can see, 16 million, 15, a little bit back up to 16. So the buying and the issuing more shares, which, I mean, they're not issuing a heck of a lot more shares, so it's not that big of an issue. As you can see, over the past 9 years it's gone from 16 million to 18 million, so it's very minimal, the amount of shares that they're issuing. But ideally we want to see this number going down. You know, it's got a habit of going down. That's what we want to see. So that's the only negative really about this company. As you can see, the operating revenue is growing lovely. 107 million, 119, 129, 157, 253. The growth is just great, and especially over the past year or two where we've had the virus going on, this has been a perfect business for people to be shipping online stock at home instead of going to the post office. So yeah, we can see great revenue growth in the company. See the net income growth as well. There's been ups and downs, but in general it's been going up. If you go to the free cash flow, the average free cash flow is 214 million. But as long as it's growing, this is what we want to see, growing free cash flow. We've had a bit of a dip here. I mean, they could have made an acquisition or anything here, but this is what you need to do your research for. Figure out why the cash flow sunk just on this year and then went back up again. As I said, they could have made an acquisition or anything like that. That's what they use free cash flow for. But yeah, everything that I'm looking at on this company is absolutely solid. We go to the balance sheet. We see the total assets 1.3 billion and the total liabilities is 338. So they got enough money to pay all their debt off and still have plenty of money left over as well. So this is a solid, safe company. So let's go to the stock analyzer tool and let's see what the future price could be in 3 scenarios after 1 year. Let's go to the stock. After 1 year, 5 years, or 10 years. So I'll just fill in this information here off camera. So we've filled the information here on stamps. We've got the low end, medium end and the high end. So these are the assumptions, and this is going to give us the lowest value, this is going to give us the mid value, and this is going to give us the high end value. So this is the historical information on stamps right now. Over 1 year it's been 35%, 5 years average is 9.7%, and a 10-year average is just under 25%. So my assumptions of the revenue growth, low end, is 18%. Now I've put that lower than the historical 5-year percent. So this is very conservative. The mid end I've put 24%, which is still lower than the average 10 years and lower than last year. And the high end I put 35%. So this is assuming what they did last year is going to be what they're going to be doing for the next 7 years. Okay, so again, not ridiculously high because they've already reached that threshold here. So the share change, and as you can see here, they've been issuing shares over the past 10 years. So the low end I've put issuing 3%, which is higher than the 10-year average, but lower than last year. The mid-year I've put they're going to start buying back their shares by 2%, and the high end they're going to be buying 4% shares. Now the reason I've done this here is because I've come across this little article here. I found this article here on stamps.com, and they're increasing its buyback program to 120 million. It says here, stamps.com doubled its existing share buyback program to repurchase up to 120 million through expiration in August 2021. The company says this increase is in response to higher market volatility, which is great to see. They've seen that the stock is undervalued, so they're spending 120 million to buy back their shares. So this is the reason why I've put here the mid to high, that they're buying back 2% and 4% over the long term. Okay. The profit margin on the low end I've put 20%, which is lower than the 10-year historical average. The mid I put the growth of 23%, which is lower than last year, which is in line of the average over 10 years. And the high end I put the growth rate of 25%, which is higher than last year, but again, it's because it's the high end. This is going to be the high value stock price. The free cash flow percent of revenue, I put here 34 on the low end, which is lower than the 10-year average. So this is basically the worst case scenario. And in the mid I put 37%, which is still lower than the 5-year average and much lower than last year. And the high end I put 43%. So again, this is going to be higher than they've ever recorded, but not far ahead of what they recorded last year. The PE ratio I've set to 20, and the free cash flow, price to free cash flow, I've put as 20 as well. And this is the desired annual return that I would like over the 7 years. So if I press analyze and scroll down, it gives us the low, the mid and the high prices. Now, if I look here, the low end is 391, which is still more than it is today. I think today is $200. The mid, this is assuming that what they've been doing, they carry on doing. Look at the stock price over 7 years. The low end of 651 and the high end of $1,000. And the high end, which is basically what they've been doing last year and this year, if they carry on doing it, maybe a little bit more. Look at the price. So as we can see here, this is a value play. If I look at if I just ignore this and I ignore this and just go by the mid assumptions, on the low end, 651, it's clearly underpriced. So if we go back to the metrics, the high end it's been this year is 309, and as the stock analyzer showed us, it could reach over $600 in the next 7 years. So the growth is huge, I think. So it's really worth to take a good look at this company, do your own research again, do a more in-depth research than I've done today. And I know I already own this stock, and I'm going to be buying more of this stock. Even just if you wanted to hold it just for the 1 year, it's going to hit this price again at some point, or even this price even better. So what do you think, guys? Are you going to be buying stamps or not? Let me know in the comments. As I said, I already own stamps. I'd like to own more as well, because I just think it's undervalued. It's not hugely undervalued, don't get me wrong. I'd like to buy it around $160. That'd be great. But at this moment in time, I think it's undervalued. And especially if you're looking at the long term, over the next 5, 7, 10 years, you know, it's a great company. It's not going out of business anytime soon. So yeah, I think it's a solid company, especially now with the buyback program, and hopefully the buyback program continues over the next couple of quarters and years. So let me know what you think, guys. If there's any stocks that you'd like me to run over the Everything Money Stock Analyzer tool, put in the comments. If there's any stock that you want me to look over, and I'll do a little video for you. Even if I do a little video at the end of my videos, I can do that for you guys. Please help me grow this channel. Give me the likes, please. I got 4 likes on my last Intel video. Let's beat them 4 likes. Give me at least 5 more likes, maybe 10 if I'm lucky. And subscribe, guys. So take care. Thanks for watching, guys. Take care. Bye.